Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The data stream has started. The US GDP second estimate for Q1 came in lower than the first estimate. This led to some respite in the rising yields, which cooled off. Today, the focus will be on the PCE numbers, which is the Fed's preferred inflation gauge. Morning, JK. Your thoughts on the US GDP number? Does it change the market narrative? And what's your expectation from the PCE later today?
Good morning. Yes, US GDP was revised lower again, from first estimate of 1.6% to 1.3%. Of course, the market was also expecting 1.3%. Now, consumption has dropped from 3.3% to 2%, and consumption happens to be the one of the largest component of US GDP, and that's maybe slightly, dovish for the monetary policy. We also had lower inventories and higher imports contributing to the GDP number coming lower. Now, we are in the cusp of second quarter, almost end of May. So the first quarter analysis is definitely backward looking, but the downward revision does hint to that the US exceptionalism, or the key engine of US economy, the consumer spending, is actually become more volatile and perhaps flagging, a bit. So that gives some, indication that, we could be seeing the slowdown that was expected for long due to higher interest rates and higher inflation. We also had some other indicators from US that was on the weaker side. Job market, rather the jobless claims for the week ended May 25 was higher at 219,000, and this is slightly on the higher side of the average of a few months. And we also pending home sale that dropped to the lowest level at minus 7.7%. So overall, we once again started to see weak set of numbers from US. If you remember, last month we had a stream of weak numbers starting with GDP, then non-farm payroll, retail sales, and industrial production. We had some respite in the form of jump in ISM data, preliminary, and then also the consumer confidence that jumped. All these things were giving some, again seeing that it was only a blip, the fall. Now again we are getting more indications of US economy slowing down. So again giving the hopes that Fed rate cut may happen in September. Probabilities have again increased above 50%, although the Fed members continue to harp on the same line that inflation is not falling as much as expected, and therefore they will have to be cautious about cutting rates too soon. Now, look at the other side of the Atlantic. We had inflation in Germany, Spain, both of them coming higher on a year-on-year basis, particularly on the core side. And this is giving some caution about expectations of rate cuts from Europe. There may be just going to be one and done kind of rate cut in June from Europe. So all important will be when Lagarde speaks after the ECB decision on June 6th. We also had the Eurozone economic sentiment improving quite a bit as per the data released yesterday. The unemployment rate in Europe has hit a record low at 6.6%, and that is also giving a sense that the resilience of the economy, Eurozone economy, has been rising and should keep boosting the spending power in the months ahead. In Japan, we had retail sales jumping more than expected. Tokyo region inflation was slightly higher. So all this giving a sense that the other regions compared to US are also doing okay. Therefore, that keeps the monetary policy somewhat balanced on either side of the Atlantic. Japan, of course, is quite far away from changing their monetary policy, but then there are hints that if inflation continues to be well above their target, and also if yen continues to weaken, they can actually move in July, uh, to change their monetary policy. So where this takes the dollar still kept in a range between 104 and 105 half. That's a dollar index. And we have the Eurozone inflation today, flash numbers, and also the US PCE number. Eurozone inflation is expected to be slightly higher. On the US side, it's going to be, as per expectations, same as last month. But then looking at the CPI number earlier in the month, which dropped on a month-on-month basis, some are hopeful that we can see some easing in the price pressure. So dollar overall looks slightly biased to the downside, but nothing to assume big without major trigger. So we will confine ourselves to the ranges. Even the yields hover between 4.5 and 4.8 on the 10-year, which keeps it in a neutral zone. Back to India, then, of course, we have GDP number from India today. The Q1 GDP for 2024 is expected to be much lower at 6.7%. And if you remember last quarter of 2023, the rise was at 8.4%. That was an exception. It's very unlikely that such a high level would be maintained. Full year GDP estimate is going to be around 6.8% versus 7% that RBI has been projecting. So the focus in India obviously will be tomorrow's exit polls, last phase of polling tomorrow, and immediately a couple of hours later, we'll have the exit polls to give an indication about what kind of initial indication about what kind of government may be in place. Of course, the final result is on 4th of June. There are, as we have been sharing, there are diverse expectations about the numbers, but broad majority seems to favor a stable government in place, and that should be a status quo for the markets, at least for the rupee, because I don't think rupee will move too much away from 83 and 83.70 ranges with RBI, prowling around whenever there is an excess moment in the currency. So a lot to look forward to. Today's data as well as tomorrow's India exit polls and India GDP as well. Then, of course, next week we have more data from US, particularly non-farm payrolls, which will be crucial for Fed policy. So look forward to more moves in the next week after today's data. Thank you.
Thank you, JK. And just quickly summarizing the data from the US side, the GDP was revised lower for Q1. Consumption was weaker, which is a little dovish for the monetary policy, as JK mentioned. On the European side, inflation was higher in Germany and Spain, and even the Eurozone economic sentiment improved. Dollar index, it continues to trade in a range. And of course, the focus today will be on the Eurozone inflation and the US PCE for the global markets. On the domestic front, GDP number from India is expected today. Q1 is expected at 6.7%, and the full year GDP estimate is at 6.8% versus 7%, which the RBI has projected. And the focus will be on tomorrow's exit polls, and the final result will be on the 4th of June. That's it from us today. Thanks for listening. Tune in on Monday for the latest in the financial markets.